Canada just paused its rate cuts. The Fed isn't moving either. And today, Jerome Powell gave us the clearest signal yet, live at the Economic Forum. Both central banks are on hold, but not for the same reason. Wondering why speeches like this matter? Markets, investors, even your mortgage, all move on what central banks say, not just what they do. So when Powell talks, the world listens. And today, he gave us a roadmap. The Bank of Canada held its rate at 2.75%, their first pause after 7 straight cuts. Governor Macklem says Canada is now in the neutral zone, not boosting the economy, but not holding it back either. Why pause? Because they want to observe the impact of U.S. tariffs. They're signaling caution and hesitation to use rates to fight trade-driven inflation. They laid out 2 scenarios: if tariffs de-escalate, soft landing; if trade war drags on, recession and inflation over 3%. Meanwhile, Powell's message at today's forum? Very different tone. The Fed isn't cutting, but it's not hiking either. Because U.S. data, jobs, consumption, growth, still looks strong pre-tariff. That gives them room to wait. But Powell warned, if inflation doesn't stabilize, the strong labor market won't last. Translation: the Fed's still focused on inflation, even if jobs cool a bit. And what about the so-called Fed put? Is the Fed still protecting markets? Powell was blunt. We're here to stabilize the system, not the stock market. So, backstops? Yes. Rate cuts just to calm Wall Street? Not anymore. So both the Fed and BOC are pausing, but for very different reasons. One sees inflation risk. The other sees trade shocks. Who's right? Drop your thoughts below, and subscribe to Working Mom's Global Market Moves for macro stories that most channels miss.